got an email here. Now, this just happens to be an email from my dad, and I shared it with you earlier, Mark.
I love this email. You might have gotten this. If you haven't, you're going to love this.
This is something else. And my dad, he's retired, so every morning he gets up and he checks his emails, and then he sends me about 3 or 4 that he thinks are kind of funny. And this one is entitled, the subject is called Financial Advice in Tough Times. So that's what we need, right? Financial advice in tough times. It says here, if you had purchased $1,000 of Delta Airlines stock 1 year ago, you'd have $49 left. With Fannie Mae, you would have $2.50 left of the original $1,000. With AIG, you would have less than $15 left if you had invested $1,000 a year ago. But if you had purchased $1,000 worth of beer 1 year ago, drunk all the beer, then turned in the cans for the aluminum recycling refund, you would have $214 in cash. So, based on the above, the best current investment advice is to drink heavily and recycle.
Your active investment is real estate.
Yes,
that house
I'm
next
passionate
door,
about it.
That house down the block.
Yes.
That is a piece of property that you feel much better about, and actively pursue good deals on those properties that turn into better investments.
Mark, what we're doing is we're buying houses for 65 cents on the dollar because of their foreclosures. We're putting $10,000 to $15,000 worth of repairs into that house to bring it up to market value. After rolling in the closing costs, the repairs, basically, we want to make sure that we've got at least 10 to 15% equity in that house when the dust settles. We would then want to rent that house out so that we have someone else making the payment on that mortgage. And then, therefore, we would have a $120,000 asset appreciating at a rate of, say, 3 to 4%, which here in Texas, we can see that appreciation. I couldn't make that statement if we were in San Diego or Tampa, Florida. But in Texas, we're in good shape. So you buy one. You get your toe in the water, feel the water, see how warm it is. If you like it, you buy more. You buy 2, 3, 4, 5. Eventually, over a couple of years, you buy 8 houses worth about $120,000 a piece. That's $1 million in real estate appreciating at 3 to 4% per year. That's our $1 million plan. That's what we basically teach people, is to how to go out there and buy that house, get the repairs done, market that house to get the best renter in there, and then go out and do it again and do it again and do it again. And before you know it, you've got $1 million worth of real estate appreciating at $30,000 to $40,000 per year, cash flowing a little bit of money each month with initial equity of 10 to 15%.